Does my business need key person insurance? My name is Andrew Ayers. I'm a business law and estate planning attorney with offices in Edina, Minnesota and New York City. And today let's take a look at a particular type of insurance that you may not have heard of, but if you're running a business, it's one that you need to know of, especially in the small business context. So I was having lunch the other day with a friend who is actually a partial owner of a very large company. We were discussing his estate plan and what would happen after he's gone to his interest in the business. Now, this business is a multi-billion-dollar business, and his interest is maybe 0.1% ownership. So it's not a very large ownership, but it's still an ownership interest that would need to be distributed upon his death to his family members. And so our discussion was, what do we do with that interest? Do we set up a trust? Do we do a will? How can we transfer that interest? And as part of that discussion, we talked about what happens also in the smaller business context. So let's say you've started a business with 2 or 3 of your friends. So we have a small business, and we have an operating agreement or a shareholders agreement that says when one of you dies, that interest shall be purchased by the business. Now, we don't know how much that business interest will be worth on the day you die. It could be you die tomorrow, in which case we know the number is pretty close to when you formed. However, if it's a few years down the road and the business continues to grow, your interest in the business could be a very large sum of money. So one way a business can make sure they protect the viability of the business is to take out what's called key person insurance. And the key person insurance allows the business to use a life insurance policy for the major owners of the business so that their families can be paid out if they die, and the company uses that insurance policy to pay for their interest, meaning then their interest goes back to the company, and it can either be distributed to other members of the company, other owners, or it can be sold off to other people. So if we don't have key person insurance, but we have a fully signed operating agreement, and we need to somehow buy out a member, you need to wonder about how much cash flow that company has. So let's say that interest is worth $1.5 million, but your cash on hand is only about $250,000 or $300,000 because you have a very overhead heavy business and you just don't have a lot of extra cash on hand. Well, in that case, the business is not able to buy out your interest and pay off your family. And I'm sure you can see that if you're owning this business and you're doing it for your family and it's providing support for your family, you want to make sure after you're gone that they are provided for as well. And that's where this key person insurance comes in. That's the role it plays to make sure we're protecting your interest in the business so that your family can be paid. It's like any other life insurance that you may have. It's just tied to your interest in a business. And then the other question I commonly get is, how much key person insurance do I need? And this is where I'm going to defer to the professional insurance brokers you're working with. So they will look at the value of your business and get an idea of what they think that interest in the business would be worth. So in a perfect world, the key person insurance would be worth more than any interest you have in the business would be worth to pay out immediately. In some cases, however, the key person insurance can pay out a portion, and then the company can continue to pay out the rest of your interest over time. And what that does is that creates cash flow for your family. However, most families would prefer to have that lump sum and get all of the interest up front. You may have reasons for that to be a cash flow business coming down the road where your family gets an extra $10,000 or $15,000 a month as the company slowly buys out your interest. So what we can see is this is another important reasons why we want to make sure we have an operating agreement or shareholders agreement in place, because you want to make sure that when someone who's an owner of the business dies, we have the right mechanism in place to protect their family and protect their interest in the business to make sure everyone's being paid fair value for their interest in the business. Now, if you have more questions about key person insurance, I'm going to recommend first you speak to an insurance broker. So while this is a legal channel and we do have lots of legal issues surrounding small business here on the channel, it's very important in this context to understand the insurance piece with the broker as much as it is to understand the role it plays under your shareholder or operating agreement. If you have more questions about key person insurance from the legal standpoint, you can go to my website, andrewmayers.com. There's a red legal strategy session button on the front page. If you click that, you'll be taken to my scheduling page. We can set up a 15 or 20-minute phone call to go through your questions and other questions you may have about your business, whether it's about key person insurance or some other issue. If you like this video, you can hit the like or thumbs up button below. You can subscribe on YouTube or go to Ayers Law TV. And if you and your partners are starting a business and things are just starting to ramp up, let's make sure we have your documents in order and we understand whether or not key person insurance makes sense for you and your business.